You're watching us here on Midcap Radar. As always, it's me, Manglam Malu, along with me, Vivek Iyer. It's been a volatile session, so to say. Even as the market's biding time, two things are clear. At higher levels, it's facing resistance. At lower levels, it's seeing some support. The midcaps have an off day in today's trading session, but nothing really to worry, Vivek.
You're absolutely right. It's been extremely volatile, and I think this week and going into the event next week, it's going to continue to stay this way. Quite a lot.
No, okay. Sorry, go ahead.
Well, we just passed the IPL final, so that's the other big event that all Indians are looking forward to.
All right. You mean the RBI policy?
Yeah, absolutely. And the small matter of the elections that are coming up.
Obviously. Yeah, go ahead.
Okay. Quite a lot lined up on the show. Lots to talk about. But first up, let's start with the headlines. Stocks trade ranged ahead of inflation data in the US and the outcome of the Lok Sabha poll results in India. Realty along with oil and gas are the big drags, even as pharma and healthcare eke out gains. Midcaps are a weak spot.
A little under 5% of Inox wins equity changes hands on likely promoters selling, while PB Fintech sees over 1% being sold by Tencent, while over 3% equity is exchanged in Concord Bio. That's not all. Timken India too sees about 6.5% equity being sold by its parent, so it's a flurry of large trades.
Sumitomo Chemicals gains in trade after companies beat street expectations post good Q4 numbers. Revenues and gross margins improve. Management say that they expect global agro solution situation to normalize in the short term.
LG Equipment's under pressure after its revenue drops 4%. Margins too contract by about 70 basis points. We also have GMDC slipping after reporting weak numbers. Revenues down 21% on a year-on-year basis.
Natco Pharma reports highest ever revenue and profitability for FY24, while Revlimid generic contribution aids Q4 performance. Management guides for a 20% top-line growth and over 20% profit growth for FY25.
All right, as we were talking about the markets bracing themselves for the big events next week, jokes aside, it is the outcome of the general elections. At the same time, before that, we'll also be reacting to the exit polls that come over the weekend. We have the RBI policy meet too. The midcaps have taken a bit of a leg down in today's trading session, but despite that, we're seeing some bit of comeuppance in a bunch of these sectors, and a large part of that gain in the last 20 minutes has been led by the metal space. So if you pull up the intraday chart of, say, something like a Tata Steel or JSW Steel, or even the metals index by itself, you would see there's been a recovery from red. It's moved into the green, and we've seen some traction in these names. In the broader markets, while we've seen more stocks declining than the number of stocks which are advancing, there have been a couple of notable gainers as well. Sun TV, for instance, was under pressure in yesterday's trading session, saw a bit of purchase at lower levels and now has moved to the high point of trade. We're seeing constant traction in names like Syngene from the word go, Oberoi Realty doing well, and alongside that we have names like Muthoot Finance too, sitting with a gain of about 2.5%. All this while we have result reactions at the bottom of your screen as well. TTK Prestige, revenue growth of just 2%, profit growth of just 1%, would go down as a bit of a soft quarter, and the stock move reacting to that as well. A little lower on account of muted numbers, Vivek.
Right, TTK Prestige muted. Dreamflow, just came out with its numbers. Revenues seem to have moved higher on a year-on-year basis, but the stock continued to remain a bit under pressure. But this is a special segment, mid-cap movers. Hormaz has been looking at the screen, and there have been quite a lot of mid-caps today that are under pressure. Hormaz, over to you.
They are under pressure, and it's a bit of a forgettable day for the broader markets, and you never know what happens in the final 90 minutes, as we saw in yesterday's session as well. Earnings continue to come thick and fast. We'll get to just up in just a bit. We'll get to that, but we'll start off with some of the losers from the mid-cap space, and LG Equipment is one of the stocks that you highlighted, 5.5% lower now. There's Schneider Electric as well, third straight lower circuit now for the stock. Capri Global and Affle India, after its earnings, seeing a bit of selling pressure there, 5% lower. As you highlighted, it is a day of block deals. Plenty of stocks seeing block deals, and it's been a while since we saw a number of block deals take place. Inox Wind is down 10% now in a lower circuit after the block deal that took place. PB Fintech also down 4%. Concord Biotech a negative reaction, but Timken India is seeing a positive reaction after the block deal, 5.5% higher. of the highs of the day, but still trading with substantial gains. PSUs are seeing a bit of profit booking now from elevated levels, and Bharat Dynamics is one of them. The stock had a dream run in the last month or so. It's seeing down 6% now. SJVN is another one down 4%. Mazgaon Dock, some of the shipbuilders have again had a stellar run in the last month or so and seeing a bit of profit booking, and HAL as well on the downside in today's session. Some stocks that are buzzing on the back of volumes, and those also are mostly on the downside. Borosil Renewables, an earnings reaction there. Sundaram Finance and HBL Power reported earnings yesterday, 3.5% lower on very strong volumes. And lastly, some stocks that are bucking the trend in today's session. There will of course be some bit of gainers. DOMS Industries, after a very strong performance yesterday after its earnings, is up another 5.5%. Sumitomo Chemicals off the highs of the day, actually at the day's low, but still 4.5% higher. GSK Pharma, and a market up or down. Exide is continuing in its merry ways. Back to you guys.
Exide indeed. What a mover. In the last few months itself, it has doubled. So that battery is definitely not running out of power yet. Hormaz, thank you so much for bringing us up to speed with all the mid caps that are moving around. Let's talk about LIC as well. Reported a good set of numbers in the fourth quarter. The company's total annualized premium equivalent actually grew by about 11% year on year. This was a lot more than what the street was expecting, and the value of new businesses also declined year on year, a lot less than what, again, the street was anticipating. Yash spoke with Siddharth Mohanty, who's the chairperson of the LIC, and began by asking him about his views on the business and the valuations, etc. as well. Let's listen in to that conversation.
The way we have delivered, I have firm belief that it will go still further high. And still I feel value is yet to be unlocked. And you see the performance of last year. We have fulfilled on our commitment. We have enhanced profitability. Non-par share has been more than double, and margin has also gone up. So if you look in totality, people definitely, investors will have more trust in LIC, and definitely will get more traction in coming days.
Where did the growth come for in the savings book for you? How did that growth come? And tell me particularly about more than 5 lakh rupee premium policies. Have you seen growth there also? Because that's the big pain point for the industry.
You see, to start with 5 lakh policies, earlier 5 lakh sum assured to total our basket, it was a 10%.
Correct.
Now it has gone up to 13%. And if you see last quarter, particularly in individual segment, we launched Jiban Utsav product, which is non-par, a product, a class on its own, a class totally apart from all other products. Today also it is gaining good traction. So that contributed for this savings growth.
Okay. A little on FY25 as well. Do you think the savings book, especially these large ticket policies also, will continue to support your AP in FY25 as well, in a similar way that it has done?
I have firm belief, because this Jiban Utsav, we launched it towards the last quarter, November 29th we launched, so hardly we got 4 months. And this year also, April onwards, we are getting good response for Jiban Utsav product, which is a savings product in non-par segment. So that will also contribute for the savings growth in the current year.
As you've been talking about the way group is working, the way individual section is working, could your AP growth in FY25 be in high double digits?
You see, AP share to our total non-par AP share, if you see, that is 18.32%. And AP growth definitely in the current year, if you see our business segment and all these products, there will be definitely double-digit growth for AP.
11% was for fourth quarter AP growth. 0.5%, as you said, was for the full year.
Full year, 9,583 crores.
Correct.
Yeah.
For FY25, you said double-digit growth. Could it be high double-digit or low double-digit? What I want to ask you is, could it go beyond 15% for FY25?
We'll definitely expect that. We'll definitely expect that.
Okay. Now, speaking about your VNB growth, here when 0.5% was the AP growth, your VNB growth was about 4.5%, a difference of about 450 basis points. Yes. Could the same difference continue in FY25 also, where your VNB could be about 300-400 basis points higher than the AP, or would it be in line with the AP?
Yeah, VNB growth, definitely further growth we are expecting. Looking to business mix, product mix, higher growth will be expected in VNB.
Okay.
Because you see in the margin also 60 basis points in margin we increased. 16.2 went up to 16.8. But the expectation is much more than that.
Okay.
So in that line actually product launch will be there and marketing of those products will also be there.
Okay. So your VNB growth could be about 300-350 basis points as in FY.
300, yes, at least.
Higher than your AP.
That is at least our expectation that is there.
Okay. Could FY25 be the year where for the full year you could actually go to about 19 to about 20% margin?
You see, slowly if you see from the beginning, starting from 14.2, then 16%, 16.2, we have achieved 16.8% VNB margin.
Correct.
Last year.
Correct.
So objective will be at least 3-4% more in that. That is our target, and in that direction we are also working on that.
Okay. So then in
around 18, 19, up to 20% will be there.
up to 20% in FY25.
That will be expectation in that line we are working.
Okay. The expectation at least that you'd be working towards would be that 20%, 19
Around,
to 20%
yes.
for FY25. Okay. One important element that will help you achieve those margins will be your non-par book. The target of non-par book was 10% out of the total individual APE. You've gone to 18% this time around. What lies next? Because this was one target that you were chasing on increasing the non-par book. You've launched dedicated products towards this. From 18%, now what's the next target to take your non-par book towards?
It will go further because I cannot tell any number, but definitely further growth will be there in non-par share of AP.
Okay. What is the ideal mix that you're looking at between par and non-par? What should be the ideal mix for a company?
Depending it will calculate as per our margin also. Because the non-par product and all those things will be calculated. But my sense is definitely it will be 20 plus.
Okay. Okay, it'll be 20 plus. And that will be achieved in FY25 itself from 18% to...
Yes.
Okay.
That is minimum we are expecting.
As we go towards September 2024, the next time when you disclose your embedded value, could it be the growth, could it be in the same vicinity, that is upwards of 20%, because that's the growth in the embedded value that you've shown?
You see, we have shown for the year almost 25%, 24.92%. As against 582, we have shown 727 crores. So going forward, definitely at least I expect some double-digit growth in embedded value also.
How hopeful are you that once the incoming government comes in after the elections, you would soon have approval on composite insurance license? And then what will be your natural choice of entry when it comes to the non-life side? And what are your plans? How have you been working towards that?
You see, once this composite license comes, LIC natural choice will be to come into health space. Because we cannot do all other general insurance like property, fire, all those things we are not expert. No? Because health, we have some experience in health. We are selling health fixed benefit products. We have some products, fixed benefit, not indemnity product, unlike Mediclaim. So we have some experience, some expertise. So we are exploring both sides, organic as well as inorganic. We will also explore inorganic type of some acquisition, some company, something like that, so that we should be in a health space. Because there is a huge market for a health space. Absolutely. I think total health insurance, total health expenses vis-a-vis insurance,
70% of the...
it is less than 3% is covered under health insurance. Correct. So huge opportunities there, and LIC being LIC, definitely look forward to come to health space.
If health is the only thing that you're looking at on the non-life side, then the acquisition naturally would have to be one of the 6 standalone health insurance companies. Is that correct?
We'll explore. We'll examine all possibilities.
Well, those were snippets of a very interesting conversation with LIC. Let's now slip into a short break. When we return, we will be joined by Priyankar Biswas of BNP Paribas to put the spotlight on the infra and logistics sector. Stay tuned. Welcome back to Midcap Radar. Even as the market slips a little bit, we are now putting the focus and the spotlight on the infra space. This is to decode the Q4 as well as the FY24 earnings and the impact of the ongoing election on ordering trends. To discuss this and more, we have Priyankar Biswas from BNP Paribas joining us now. Good afternoon, Priyankar. First of all, thank you so much for taking the time and joining us here. First up, give us a quick wrap of how did you see Q4 pan out? How did you see FY24 pan out? We understand NHI ordering, was it something that was up to the mark? And also a sense of the largest player in this particular space, L&T, they have also guided for weaker margins given the intensive competitive intensity.
Yeah, thanks Vivek for having me. So of course, as you were firstly asking about this NHI ordering, so this has been kind of weak. When I say that, it is almost like 30% down year on year. So essentially 8,500 kilometers worth of highways have been ordered. So this is something which is an usual phenomenon, I will say, in election years. So let's say FY14, even 19, we have seen that. But that is not to say that we had a general slowdown. Generally, we had order inflow coming in from spaces like transmission, and there is a strong, healthy pipeline, of course, of the projects. Since you asked about L&T, so what has happened was we had seen some correction in L&T just exactly after the results. So that was probably driven by the relatively muted core margin guidance, so which was, let's say, flattish YOY. What I think is that it is probably a conservative guidance. So they have been underperforming on the margin guidance for some time. And they have given a relatively strong order inflow guidance of 10% on a relatively robust base. The thing is that there are concerns that probably there would be a slowdown, let's say, in Saudi Arabia or the Middle East. However, honestly, if you ask me, I do not think so. So that is something we had worked upon. And this is borne by some data points like, for example, Saudi Aramco capex has actually gone up. That's what they have announced for the next year rather than the expectation that it will go down. So those things are there. So what we also believe is that going forward, the non-infra portion in the core will start increasing. So especially driven by real estate, and that can actually lead to some bit of margins coming back. As far as your question on competition, the way I will put it is, yes, due to the weak NHI ordering, a lot of this road construction names has actually started bidding in projects like in railways and metros in certain EPC works. So there the competitive intensity did go up. But having said that, for relatively complex projects,
Right.
rather higher ticket size projects, we have seen the competition actually being lower.
All right, Priyankar, I'm more interested in your logistics side of things, and Aegis Logistics, that's a stock that you've been pretty bullish on in the past as well. And the stock has seen a big rally. If you just pull up a chart for this year itself, in 2024, the stock has doubled. In the last month or so, it has seen a big up move. It's outperformed the market by all parameters. This year, stock up 120%. How much more do you think is an upside on a stock which has already rallied so much? Gas prices have come down, so they always have the benefit of, the cushion of margins every time the gas prices do come down. From here on, where do you see the stock going, and is the best of the up move behind it?
So I won't say the best of the up move is behind. So we had put down a report yesterday on Aegis, so where we have increased our fair valuation to around 870. But having said that, we have also did certain scenarios like up to what level it can go up to based on certain levels of, let's say, like upside that can possibly happen. So even in such scenarios, it is possible that the stock can even go and trade up to 1,050 odd levels as well. So that's our published view. Now, what we are saying is that we have actually taken a EPS CAGR of more or less very close to 20% from FY24 to 27. Now, mind you, the management guidance is far higher, is what I will say. So they are saying like 25 odd percentage. And if we consider that aspect, there is, of course, further up move potential. Now, I would highlight that results were also there on Friday. That was a spectacular set of results. So like close to 39% beat on our EBITDA estimates. More important than the results, the outlook was far more stronger. So they had even gone and ventured into ammonia terminals. So that's what they had said, that so Aegis is no longer, you can say, going forward will be a single, let's say, commodity play like a propane or a LPG. So we can consider it even like for ammonia potential going forward. So
Right.
it's a combination of net cash, strong growth, and reasonable ROE. So we are speaking of something like 17-18% ROE.
Priyanka, we are running out of time, but I want your view, very quick, short view on two more stocks. You've been quite bullish on JSW Infra. The company has also said publicly that they are looking for inorganic growth, names like Navkar Corp, something that they may anticipate. So JSW Infra, I want your view, and I also want what could be the upside in case they go ahead and manage to conclude a successful acquisition. And the other stock is Container Corporation. What's your view over there?
Yeah. So firstly, coming to JSW Infra, so they have a huge runway for acquisition. So that's something we highlighted because they are almost like net debt free at FY24. And they have a target range of 2.5 net debt to EBITDA. So essentially, there is a lot of cushion. They have a 30,000 crores capex pipeline. So it will be both organic and inorganic. And given if we are assuming a 16% ROCE on that, so our target price is based on that. However, if they do much better and if they are able to do, let's say, operating assets offhand, which is definitely a possibility, then in our scenario analysis, it can be potentially like a 350, 360 as well. That's what we had highlighted. So we see this as a play on Indian steel demand without taking the price risk. That's how I will put it for this name. Coming to your second part about Container Corporation. So, of course, the company has been losing market share for some time. And the pricing pressure by other peers have been clearly been evident. And there has been a recent question marks on the LLF part because on the particular Tughlakabad terminal, the demand by Indian Railways is different from what they're booking. But what we will highlight is it's a play on the WDFC, that is a Western Dedicated Freight Corridor, and importantly on the divest potential strategic stake sale by the government. So if post-election something material happens on that, we see that there can be an up move. Now, management has also highlighted one more thing about this LLF, that if they transform themselves into Gati Shakti terminals, what they are trying to do, then yes, their LLF levels can come down by close to 100 to 120 crores from current levels, and that can be a positive.
All right, take that point. Thank you so much, Priyanka, for joining in and giving us your views on a whole host of stocks. We should speak to you soon again, and especially when we see any big move on Aegis Logistics, we'll definitely call you to ask you what exactly is taking place. We take a short break, come back on the other side. We focus on a lot of other stocks which are on our radar, on mid-cap radar. Welcome back. Amidst all the mid-caps which are on our radar today, Flair Writing is on our radar on the back of their fourth quarter numbers. And this is our special segment, Mid-Cap Spotlight, where we put the spotlight on this writing instruments maker. Upasna joins in to tell us more.
Well, the company's reported a mixed set of numbers with the revenue downtick of 4% on a YoY basis. Margins are down about 30 basis points at 20.2%. And PAT has seen a single-digit growth of 3% and stood at 34 crores. In terms of total revenue mix, the export contributes about 24% and domestic contributes about 76%. On a full-year basis, the revenue growth was single-digit, just about 4% on a YoY basis, and margins have expanded sharply, almost 100 basis points at 20%. PAT stood at 118 crores, which is again a flat growth of 0.9% on a YoY basis. Well, the management commentary remains quite positive, and the company says that the existing business continues to grow despite facing subdued demand from the OEMs. The company's capacity expansion plans in writing instruments have been set into motion with the commencement of construction of new factory in Valsad. The company has also signed a license agreement with Disney for branding their characters for a range of stationery, art and craft products. And the company's main segment, that is the pen segment, has done well across the brands. Creative segment continued their higher double-digit growth of 28% on a YoY basis, and company's newly commenced steel bottle segment has also started making breakthrough in the market, is what the company has highlighted.
Thank you so much, Upasna, for putting the spotlight on Flair Writing. But that's all the time we have on this edition of Mid Cap Radar. Your stocks when we return.